Welcome to the deep dive. Today, we're really getting into something pretty big. It's a proposal that could, completely change X.com as we know it.
It really could. The scale is huge.
And there's this eye-watering number attached. We're talking about a specific $60 million grant opportunity.
Mm-hmm.
And this isn't just free money. It's earmarked to transform X.com, beyond social media into a genuine, real-time financial engine.
Yeah, and our sources today aren't just throwing ideas around. We're looking at a detailed analysis by Bruce Stewart, and he's drawing heavily on insights from Marshall Hayner, who's the CEO of Metallicus.
Right.
So our mission really in this deep dive is to break down their argument for why X.com, if it wants to be that everything app, kind of needs to build its payment and trading future on the XPR network.
Exactly. So we're examining a system they claim is basically ready to plug in. And the big question for you listening, and definitely for the folks at X.com, is this. Can the XPR network, which seems very focused on compliance, actually pull off this merger? Combine global social stuff with legit regulated digital finance?
Can it be the foundation for X.com's next big move?
Let's get into the mechanics of this pitch.
Okay, let's start with the money, because that $60 million figure, it's a fantastic hook, right?
Yeah.
But it definitely comes with strings attached. Serious ones.
Okay, so tell us about the grant itself. Where's it coming from? And what does X.com need to do to actually get it?
Well, the source material is pretty clear on this. It's $60 million specifically for innovation. And they draw a really sharp line here. It is not for just, speculating or trying out wild experiments.
Okay. So it demands a certain level of seriousness.
Absolutely. The argument presented is that if Elon Musk's team at X decides to integrate the XPR network, they basically tick the boxes needed to unlock that funding. It signals they're committing to a very specific regulated tech path.
That's interesting. So it's less about adding a feature and more like adopting a whole new philosophy almost. So for listeners who maybe follow crypto or blockchain, what is the XPR network? Why is it being presented as the key, the prerequisite for this cash?
Right. The difference is really in its design and its stated goal. Metallic has built the XPR network, and they don't position it like, say, Bitcoin or Ethereum. They see it as the base layer for a future U.S. digital banking network.
Digital banking network, okay.
And critically, it's built on their metal blockchain, which they emphasize as layer 0.
Layer 0. Okay, we hear layer 1, layer 2 all the time. What does being layer 0 actually mean in practical terms for a giant platform like X.com?
Think of layer 0 as the absolute bedrock. It's like the fundamental operating system for finance itself, not just for one app built on top. It's designed from the ground up for the speed, security, and importantly, the immutability that regulated financial institutions need before they'll even touch it.
So it's about deep level trust.
Exactly. And that's the immediate strategic advantage highlighted in the proposal. X.com wouldn't have to build this complex, compliant infrastructure from scratch. They'd get instant access to a U.S.-built system specifically designed for the heavy demands of digital banking, not just, DeFi apps.
Right. It sounds like a massive shortcut, potentially skipping years of navigating regulatory minefields and building that core trust layer. Which brings us neatly to the technical side.
The nuts and bolts.
Yeah, because infrastructure and compliance, those are always the two biggest hurdles when tech platforms try to get into finance. So why does the proposal claim XPR Network is the quote-unquote right fit? Let's start with the tech advantages.
Okay, technically, they focus on hitting the big pain points in global commerce. First is scale. You need to handle massive volume globally. XPR aims for this with instant high-speed transactions that are, and this is a huge selling point, feeless.
Feeless.
Yeah, the source materials even have visuals saying no gas fees.
Yeah.
For a platform like X with millions, maybe billions of tiny interactions, that's potentially game-changing. No friction for microtransactions.
Okay, hold on. That sounds amazing for me as a user, right? But feeless. How does the network actually sustain itself? Doesn't that, create a problem for its long-term security or economic model if no one's paying per transaction?
That's a fair question. Definitely a point people raise. The proposal implies the sustainability isn't based on charging for every single transaction, which, as you know, can kill microcommerce. Instead, the Metallicus ecosystem plans to make money through other services.
Like what?
Things like premium identity verification services, perhaps, or other financial services built on top of the network. So they shift the cost away from that basic interaction level.
Right. So the core movement of value remains free, but services around it might have costs.
Okay, that makes more sense. What about security then, and the actual engine driving these transactions?
That brings us to advantage number 2, secure identity integration. In regulated finance, you can't just have anonymous wallets floating around.
No way. KYCML is everything.
Exactly. The XPR network is designed to tie verified identity directly into the system. Crucial for meeting those global know your customer and anti-money laundering rules. And third, there's the engine itself. The capability to use programmable digital dollars via their own offering, which is called Metal Dollar or SexMD.
Okay, so SexMD, is that basically their version of a stablecoin, but built specifically to meet banking rules?
That's the idea. It's designed to work like instant compliant money within their ecosystem. It provides that stable settlement layer, so creators, advertisers, users, everyone can transact without worrying about crypto price swings or regulatory question marks hanging over other digital assets. Okay, tech sounds slick. Instant, feeless, identity-linked, programmable money. But now the big one, regulation. Speed means nothing if it's shut down by regulators.
Absolutely make or break.
The proposal seems to really hammer this point: regulatory alignment.
That's probably its strongest differentiator compared to, well, most other blockchain projects out there. The XPR network claims full alignment with ISO 2022.
ISO 2022, refresh my memory on that one.
It's the emerging global standard for financial messages. Think of it as the common language that banks worldwide are moving towards so their systems can talk to each other smoothly and, importantly, compliantly.
Got it. So using it means X.com's financial system would speak global bank from day one.
Pretty much. It dramatically reduces friction if X.com has ambitions for cross-border payments or banking services.
And what about the US specifically? That's a huge market with complex rules.
Right. They cover that by highlighting alignment with OCC interpretive letters. Those are the guidelines from the Office of the Controller of the Currency, the body that regulates national banks in the US.
Okay, so that's significant. It means they're building based on signals from a key US banking regulator.
Yes, it suggests they're operating within, or at least alongside, established US banking regulatory thinking. Not just hoping regulators will catch up later. It's about existing standards.
And does the proposal offer proof that this isn't just theory? Like, are they already working within the system?
They do. They point to existing partnerships they've already built with US banks, credit unions, various fintech companies. This isn't just a blueprint. It's tapping into connections that are already operating in the regulated space.
So X.com wouldn't be the first one testing these waters.
Exactly. They argue X.com would be plugging into a system that's already done a lot of that heavy lifting on the regulatory and integration front. And again, that focus on layer zero, the deep infrastructure, plus the explicit regulatory compliance, it's what positions it, in their view, for real digital banking, not just crypto trading.
It sounds incredibly robust, almost like a turnkey solution for compliant finance. But, okay, let's play devil's advocate. You're talking about verified digital identity, regulated commerce, global payments, all potentially running through X.com. That's an enormous concentration of power in one company, isn't it? Does the proposal address that centralization risk?
That's the inherent tension, isn't it? While the underlying metal blockchain might be decentralized in its structure, the main access point here is X.com, which is obviously centralized.
Right.
The proposal doesn't shy away from it entirely, but it frames the benefits like financial inclusion for people without access now, thanks to verified ID, and the security of regulated finance as outweighing those centralization concerns.
A trade-off.
Essentially, yes. The argument leans on the security of the layer zero infrastructure to protect the financial data, assuming users trust X.com to be the platform delivering that access.
It's a huge bet on corporate stewardship, essentially. Security and compliance, potentially at the cost of platform dependence. Okay, let's shift gears then. Section 3, the grand vision. If X.com does do this, integrates XPR, what does the platform actually become?
Well, it stops being just a social network with maybe a send money button added on. The vision is much bigger. It's about transforming X into a full-blown, real-time payment and trading platform, something designed to scale with where digital finance is heading globally.
A complete economic layer, essentially.
Precisely. They're pitching an entire ecosystem.
So what does that look like day to day for me scrolling my feed, or for a creator on X or a business running ads?
The goal is to make moving value feel as seamless as sharing information. So creators get paid instantly, advertisers settle campaigns instantly, users tip, subscribe, buy things. All using compliant digital money like SexMD.
Wow.
Rewards, digital goods, everything moves instantly across the platform. The source material uses a key phrase. Every interaction becomes both social and financial. The money layer just woven right into the social fabric.
That's like turning X into its own digital economy, with its own approved currency, its own rules via compliant and verified citizens through digital ID.
That's a good way to put it.
So that leads to what Metallicus calls the bigger vision. What's the ultimate prize here for X?
They frame this integration as the key to making X the global hub for really three core things, all linked together: verified digital identity, compliant commerce, and financial freedom.
Okay, verified ID and compliant commerce. Those sound like the security measures the foundation needed to safely offer the third one, financial freedom.
That's exactly the logic. They argue that billions are locked out of traditional finance because they lack easily verifiable ID or face regulatory barriers. By providing that verified ID on a compliant, robust layer zero system, X.com could, theoretically, offer regulated financial services to almost anyone, anywhere.
Instantly.
Secured by the metal blockchain tech. It's a very ambitious play for global financial inclusion, but crucially, built on a foundation they claim is regulator-friendly from the start.
All right, let's try and wrap this up. Where does this leave us? We've got the XPR network, positioned as this ready-made, compliant, scalable infrastructure.
Yeah.
We know there's a real $60 million grant focused on innovation tied to this kind of move.
Check.
And the vision is huge, turning the Bird app or the X app into a global financial utility.
Right. As the proposal from Bruce Stewart lays out, essentially. The tech's supposedly ready. The regulatory path is claimed to be clear, and there's significant funding as an incentive.
So the final piece, the big unknown highlighted in the sources, is simply whether X.com, whether Elon Musk will actually pull the trigger. Will they decide to build their financial future on this specific Layer 0 network?
It's more than just choosing a vendor, isn't it? It's a massive strategic commitment. Carrying that $60 million boost, yes, but also the potential to fundamentally change how global commerce and identity work online.
Which leaves a pretty heavy question for you, the listener, to maybe think about after we finish here. Let's say this works. Let's say X integrates XPR, and we get this surge in financial access and efficiency. Is that benefit secure, compliant, global digital finance for potentially billions worth the flip side, which is concentrating so much power over identity, commerce, and finance within one single company, X.com?
That balance, that trade-off between potentially unprecedented inclusion and equally unprecedented centralization, that's the core consequence to really chew on, is it, if they make this move?
A really profound thought to end on. Thanks for walking us through all the layers of this proposal today. It's complex, high-stakes stuff.
Absolutely.
We'll definitely be keeping a close eye on whether X.com decides this layered F0 foundation is where they want to build their next chapter.